There's a lot of talk about rental rates in Canada right now, and there should be, because rental rates are evolving as what I would say could be the biggest threat to house prices in Canada in 2025. And that's even if you include the upcoming federal election and the trade war that we're facing at the moment. Let me explain why. This recent report by Liv.Rent observed the price declines that are beginning to take place and that have historically taken place as we see a decrease in population growth or immigration. Well, this shouldn't come as too much of a surprise, because at the beginning of 2024, the Bank of Canada actually observed this same correlation, that strong population growth is supporting inflation and rental prices. Why does this matter for house prices? Well, house prices are at their very lowest a function of rents. If we assume that the investor bid is a meaningful part of the housing market in Canada, which according to the Bank of Canada, it's about 19% of the total market, but they are the group of buyers that have seen the greatest increase in size, and they also are least sensitive to changes in interest rates, income, and the economic scenario. They're probably the most likely to end up buying if we end up in a recessionary situation, which seems like a pretty likely outcome at this point. Investors look at properties and they use a cap rate formula to value it. A cap rate formula is your net operating income, which is a function of your rents minus the expenses that the property incurs. You take that net operating income and you divide it by the purchase price of the property, and that gives you a rate, a percentage. You might use this to compare two properties side by side based on the performance of the price relative to the rental income. And so when investors are the prominent buyers of property, rents really matter to the value of property. This is why I spend so much time analyzing the rental market, and this is why if you're a real estate professional or a real estate investor, you should do that as well. One of the sources that I like to use to do that is CMHC. They put out great data, but I find that it's not agile enough. But the private sector, and especially the private sector that interacts with landlords and with real estate investors, namely a lot of your rental platforms, also put out some of the best rental market reports. And one of the ones that I really like to look at is on Liv.Rent. They have monthly reports from major metros in Canada, and they also put out an annual rental market trend report, which I'm going to be going through today. You can see it on their website. You can use the link below this video and just hit download report. Okay, so let's get back to that chart that I started this video with, which states that immigration is shaping the decline in rent prices that we're seeing in Canada. And so you can see, if you go back historically, that, in 2015, you see a little bit of a decrease in the population growth rate, and you see a decrease in rent price growth. If you look at a little bit further ahead, you see a bigger decrease in rent price growth, and you see a bigger decrease in population growth. And let's go fast forward all the way to COVID, where we saw a pretty significant decrease in the rent price growth. And at the same time, you saw a very significant decrease in population growth. What we can see here in Canada is that population growth rate is still growing. You see this big jump up in the population growth rate, and you see a big jump up in the rental growth rate. You see a slower increase in population growth rate. You see a slower increase in the rent growth rate. And that continues to taper off until the likely outcome is it starts to go negative, and you see a decrease in the rental growth rate, if not a decrease in rents, which is what we are seeing in a lot of markets across Canada. And this isn't just on a national basis. Only 3 provinces saw an increase in population growth: Quebec, Saskatchewan, and Manitoba. And interprovincial migration slowed down, with year-over-year momentum dropping by 8%. Even in places like Alberta. Now, Alberta does still remain the top choice for Canadians relocating. They're just doing so at a slower rate than they were in 2023. And emigration, people leaving Canada, is actually the highest level since 2017. And Ontario accounts for nearly half of the people leaving Canada. Canada is also going to see a 50% decrease in net non-permanent residents. So the net number of new people being added to each province, you can see here, is decreasing anywhere from 23% to 115%. I'm going to quickly go through these province breakdowns because I'm going to dive in a little bit further on these at a later date with some separate videos. The key things that are happening in Ontario is there's a downward trend in rent price growth. Ontario is leading Canada in emigration. Ontario also saw a 66% spike in non-permanent residents departures. Toronto's rental market, which is often can be a bit of a canary in the coal mine for Ontario, softening pretty significantly as rents are declining. Rents have basically been trending down throughout 2024 with a couple of slight upticks. Quebec, on the other hand, hasn't been too much of a victim to people leaving. In fact, fewer Canadians are leaving Quebec. It actually saw the lowest loss in over a decade. And they had the second highest immigration levels that they've had in over a decade. They were among only 2 provinces to see a growth in non-permanent residents. And a lot of this has to do with the fact that they've been able to protect affordability pretty well. Jumping over to Alberta, which has been obviously the darling of Canada for people migrating in search of affordability, either as a tenant or as a property owner. It seems like that whole party might be coming to an end a little bit. Alberta did lead Canada in population growth for the second year with a rate of almost 4% compared to everybody else basically in the 2s. And this is on a percentage basis. If you look at it on a pure numbers basis, Alberta is the second largest recipient of immigration, beating out BC and Quebec for second place after Ontario, which is obviously still and probably always will be the largest immigration hotspot just because it's the largest population, most metropolitan centers, jobs, places to move to, etc. Edmonton has really been bucking the trend as a result of this because a lot of people are moving to your 2 big cities in Alberta. And Edmonton historically hasn't really been a big rental or renters market. It's had a high home ownership rate, and a lot of people would move there because they were going to buy. But because housing is becoming less and less affordable everywhere in Canada, Edmonton has really seen a lot of growth in people moving there for affordable rents, especially because incomes are pretty high in Calgary and Edmonton, especially relative to rent. And so that can push the rental rate up pretty significantly. The one X factor I will mention before we move on from Alberta here is that Alberta's really good at building and they're really good at responding to demand. And so as a result of this, you can see here the 2 cities in Alberta, Edmonton and Calgary, have seen significant jumps in construction as a result of all of the people moving there. Edmonton seeing a 40% increase in housing starts. And this kind of sets it up so that those markets could pretty quickly go from being in a state of excess demand to a state of excess supply should the population growth that Alberta is seeing kind of slow or taper off, while also seeing a record number of new units being added to the market. So you've got a huge increase in supply and a potential slowing of demand, which could probably grind to a halt a lot of the growth that we've seen taking place in Alberta. And I imagine most people would be totally fine with that, except maybe people who are speculating on that market. An easy way to look at this is if you look at CMHC's report, vacancy rates for brand new builds jumped from like 2% to 7% year over year, 23 to 24. And a lot of this is because Calgary's apartment completions grew 134% in 1 year. Heading a little west to BC, there's actually an increasing number of people leaving BC and a lot of them going to places like Alberta. And BC is no longer the second most sought after province for immigrants. They've been usurped by Alberta. And as a result, Vancouver's rental market is seeing declines throughout the year in 2024. Likely we'll see some year over year declines in rental rates throughout those markets. And so in their current state, Vancouver's rent prices are falling. And probably most of this is because they are seeing a huge decrease in immigration in Vancouver. Now, there's another excellent section of this report that I'm going to cover in another video, which is a survey of landlords and tenants that was done by Liv.Rent, which has some really fascinating key takeaways. So stay tuned for that in another video. Just to quickly summarize the key highlights from this video, rent prices are dropping year over year across Canada. Edmonton is pretty much the only market that's been able to buck that trend and see growth, but based on the amount of supply that they're putting in the market in response to the demand, it's not certain whether or not that trend will continue. Anyway, I hope you enjoyed this video. I would encourage you to check out the Liv.Rent website for a bunch of their monthly market reports. So they have every city. They do a Calgary and Edmonton as an example, but they have rent reports for 4 different metros in Canada on a monthly basis. So if you're a real estate professional or an investor looking to get an edge, or at least a little bit of a predictive understanding on what could happen as a result of rental rates, I would highly recommend you take a look at these to stay on top of it.